Well, welcome back, y'all. Welcome to Before 30. This is Auntie Janine.
This is Nephew Trey. We are super excited to be back in the studio.
Yes, we are. And the reason we are is just like we promised y'all last week, we were spending the month of November getting this money thing right.
Yes, and it's this serious. We want you guys to see our face because this is serious. This is serious.
Yes, this is serious, right? And this is the first recorded video show that we'll have. So you can find us on YouTube now at Before 30. And so just find us on YouTube.
Yeah.
You get to see the faces behind the voices. And so we're excited to launch our YouTube channel with the financial series of Before 30. You can also find some of the audio from the past series, just maybe no photos, no live video of us talking. But the content is there.
Yes,
but,
and we're going to have numerous guests that are really going to help us dig deep into some of these topics. And I don't proclaim to be an expert in any of this, but a lot of this we have experienced in life. We have close family and friends. And so we just want to be able to bring others in so that they can share their expertise and their insights on these topics.
Yeah. And how can we help you get closer to your journey of purpose if we don't talk about finances, right? Because we find a lot of people make decisions, both good and bad, even out of desperation because of what's happening with their financial situations. So we would be doing all of you a disservice, right? To say that Before 30's purpose is to help you on your journey to purpose if we don't talk about your money, right?
Exactly.
It's imperative. Like, you do not want to be 60 years old, 50 years old, still trying to get out of debt,
trying to figure it out.
Right. And learning how you handle money and what some of your behaviors are around money. And it's a constant learning process, right?
Absolutely. And I think that's why this episode, I'm super excited because it talks about money mindset. So it's, what are the thoughts that come to mind when you think about money? What are the lessons you may have been taught when you were younger that you now carry with you into adulthood?
Or your behaviors.
Yeah. Exactly.
Behaviors. And just how do you feel about what you can do with money? Do you see money as a gateway to access to things that you want, or is it a burden, something that pulls you or pushes you? And so I'm excited that we're going to be talking about this today. And, even before we get into it, like I realized when I say that it's like this continuous journey, I was looking back over my finances for 2019, and that was the year my mom passed. And I'm looking like, how did I start? I could just go in my closet, actually. But I started looking, I was like, I done bought like 20 pairs of Adidas and Converse and just buying things. And what I realized is that I was having an emotional response to buying things, right? I was grieving. I was feeling that grief with making purchases of things, trying to fill a void, which is unfillable, right? Yeah. Buying things does not fill the void of losing my mother, but I was so happy that I recognized that. I was like, wait a minute, I'm spending too much money, and I was still feeling bad. And so these are the things that we want you all to be aware of when it comes to your money.
Yeah, and so we are super excited. I am super excited to jump into this topic. We have someone who is going to help us really, dig deep and just going to provide some perspective on money mindset and cash flow. So joining us today on this show is Miss Imani Hamilton. She is the founder of Finance by Faith, LLC, where she helps people of faith manage their cash flows, crush debt, and acquire real estate strategically. She is a finance professional with over 15 years of experience in the financial services and real estate industry. Imani leverages her professional experience and personal financial journey to help others take their finances to the next level and own their wealth. Now, Miss Imani, she graduated from Clark Atlanta University.
She's smart, y'all.
And she's smart. That's with her BS in mathematics. But then she earned her MBA in real estate and finance from the Wharton School at the University of Pennsylvania. She's a board member and strategic advisor on several nonprofit organizations and churches. When not working, she loves spending time with her husband and 3 children. Welcome, Miss Imani Hamilton, everybody.
Thank you so much for having me. I'm really looking forward to our conversation today.
This is going to be a good one. This is
Yes.
going to be a good conversation, and we don't want to delay it. But we want to hear a little bit about you. We know you have a husband and 3 beautiful children. And I know in our conversation, we're going to be talking about some of the things that you and your husband had to get on the same page about with money. But before that, just tell us a little bit more about your business and how you work with clients, and how did you get into this, financial literacy and real estate money making. How did you stumble into this where you could be some big time executive at an IT company, like with the mathematics, with the MBA? Why this? Why this, and why now?
Well, first, again, thank you so much for having me. I am someone who is extremely passionate about faith, finance, and family. So as a Christian, I'm always just trying to strive and live according to my beliefs. When it comes to finance, ever since I was a little girl, I just love crunching numbers and solving problems. So it really was a no-brainer for me to get a degree in math, even though I had no clue what I was going to do with it. But I knew numbers was my guiding path, if that makes any sense.
Guess what, Trey?
What's up?
She's a nerd, just like
I know.
Girl, you with the
It's all good.
Very proudly. I am a nerd to the fullest.
That's right.
And when it comes to family, yes, I do have a husband and 3 beautiful children, but I also come from a very strong and supportive family. I'm the only child, but I have a tons of aunties and cousins and uncles who have truly supported me, and I think made me who I am today. And so when I was in corporate, I had these very wealthy clients. I was commercial real estate lending, and I would say about 95% did not look like me. And what I was seeing was that there was just huge disparity in our community. And I really just wanted to take everything that I have learned and what I was exposed to into our community so that we can really, really get a handle on our finances and really take our families and our communities to the next level. So, of course, focus on the basics, which is budgeting, saving, debt elimination, and investing. But what I really specialize in is cash flow, because I fundamentally believe that you cannot reach financial independence, financial freedom, financial abundance, whatever you want to call it, or achieve any financial goal without having cash flow.
Yeah.
I want to go back a little bit. So you kind of mentioned your experience in corporate, but I guess during your upbringing, was there any particular experience that you maybe had that really made like money? Was there any particular experience you had that really gave you a message of what money could be, or what the value of a dollar was?
Yeah, so I would say 2 things. It's interesting. So I grew up in North Philadelphia, and my parents owned the only 2 abandoned houses on the block. So we lived on the block, but then there was 2 other houses on the block that we owned. And they always had a plan to, renovate them and either rent them out or sell them, but they never got around to it. But growing up, I understood, observing that property ownership was extremely important. And so as I went about my journey after graduation, I quickly tried to own as fast as I could. In about a year and 9 months, I got my first property. And then I got 5 other properties after that within like a 6-year time span with my husband. However, 2008 Great Recession hit, and we were left holding the bag on one of the properties. We could not sell it. We couldn't even do a short sale. We could not keep a tenant. All the savings and the money that we made from the other properties that were very profitable went down the drain trying to keep this, up and float. And so we ended up losing the property anyway. And that experience really helped me with a whole new perspective around debt. Because back then, there was a lot of gurus saying, well, borrow as much as you can because it will help your investment returns. And that's mathematically true. But I didn't hear nobody out here telling me that the borrower was slave to the and I really liked it. And so from that point on, I said, what, there has to be a better way. And so I know that we live in a society where it's really hard to kind of get a house and do all those things without debt, but really trying to figure out how do you live and really minimize your debt so that you can truly live an abundant life.
Yeah. And that's what's important for us, right? Because, for us to help people find purpose, you want to have clarity, right? And when you're loaded down with debt, it's just so hard. I know people who lose sleep over it. They have acne, they lose their hair, relationships fall apart. And so, we want to even help people with the mindset, right? So even before we talk about the positive cash flows, which we will talk about, let's talk about like what are some of the things and pitfalls that you've seen that can help inform how young adults before the age of 30 think about money?
Yeah, so there's a lot of pitfalls. I believe the common ones are impulse spending, and you don't even have to leave the house anymore because it comes right to your inbox, right? Every
It's
morning,
horrible.
how many emails do you see about all these different stores? And so it's always hitting you dead in the face. And so it's really about just unsubscribing, or don't even, just quickly delete them, because it really is, oh, that looks nice. Everything looks nice, right?
Mm-hmm.
And so
Mm-hmm.
impulse spending, I think, is definitely number one. I think a second one is discounts. Now, I am all about buying this on a discount, sale, bargains, all of that. But if you find yourself buying something because it's on sale, you're not really saving anything.
You talking to me?
But right? I mean, if a jacket was $200 and it's on sale for $100, but you had no plan of buying that $200 jacket,
You don't need it.
right? You didn't save $100.
Right.
You're out $100, and so being very cautious and aware of that. There's also what I call either status or social driven spending. So that's the whole fear of missing out. If your friends are doing something, and obviously a lot is more going on when it's pre-COVID versus right now. But even social media, it's like we get a peek into everybody's life and what they're doing and vacations, and it makes you want to do what you potentially can't do right now.
Yeah.
And so that's something to look out for.
What is it? Is status spending, say you're in your 20s, you have a credit card, you want to buy your mom a really nice gift. So you go and you buy her, a Louis Vuitton or a Gucci handbag. What is that, right? And you have student loan debt. You don't make more, you're not making a significant amount of money, but maybe you have student loan debt, or even your parents might have student loan debt on your behalf, or you're paying rent or a mortgage. Like, why would you go and buy your mom a $15,000 handbag? Is that status spending too?
I would,
or yourself?
So to me, I hear that might be somewhat of either a guilt, or you are so appreciative that you want to quickly try to, repay your parents for all that they've done for you. But most parents understand that you are in the building phase. And whatever that expectation might be. So every family is different, and it's really hard to say what somebody might be doing. But when I see it, because I'm saying, why would you do that? I feel like it's either because you really just want to show your appreciation and you want to do it right now, or you might feel some sort of guilt trip. Or if your parents are very social and status driven, and that is how they show love, you might feel pressured to have to show that love back by money.
Yeah,
definitely. That makes
good.
sense. And when we think about, because we all have our own journeys that we've had, while we were either in our parents' household, when we were young adults, when we get that first job, there's always these transitions and phases in life, which we might have to revisit this money conversation to shift our mindset. Can you talk about maybe any situations you've had in your adulthood or your young adulthood that has made you have to focus on, better managing your finances?
Yes. Well, I would just say that coming off of that whole Great Recession situation, I was then in my first year of grad school. And so I was racking up over $100,000 in student loan debt. And it was a situation where we really had to change our mindset. So before we decided to get out of debt, it was, okay, if we can afford it, then it's fine. Let's do it. If we can afford a car payment, All right, that's great. Let's go get the 2020 car or whatever the case may be. And now I had to shift from being comfortable to freedom. Because what freedom says is, okay, yes, I can afford that $400 car note, but what is it doing for me to get out of having to go to this 9 to 5? So the student loans really helped me. I was at a job, I was working for a bank, and I just got to a point where I couldn't stand it. It just no longer was a culture fit. I won't say there's anything wrong with me or anything wrong with the company. It was just time. And was stuck. We were stuck because we had $2,700 per month in debt. And that didn't even include the house.
Wow.
That was student loans, car notes, $2,700. You're talking about probably 2 mortgages, right?
Yeah.
I really started spending. And so I was forced to have to stay there until I could find another job. And it was at that point that I said, okay, you get all these degrees, right? You get this nice, cushiony job that's paying you wonderful money, but I'm stuck. I'm stuck. And so we had to go from, okay, yes, we're comfortable, but we're in debt. Let's be free.
And you use that word, what you can afford. Can you unpack that? Because what does that really mean? Like, just because you can afford something, is it a real, should you be purchasing it?
Right. So, I mean, just, fundamentally your budget, right? Let's say you bring in $3,000 and your expenses are $2,500. And so you have $500 in cash flow. That's what I call cash flow, right? So you might say, okay, you know what? My car is running, is getting me where I need to go, but, I want to upgrade. I want to get something nice. And so you upgrade because, yes, you can afford a $400 or $500 payment. But it's not necessarily wise for you to do. Why? Because you already have something that is getting you where you need to go. And that $500 can be building towards a down payment on a property or a down payment on a rental that will bring you income or into the stock market. And so you definitely want to put your money to work. It's not enough you to be working. You want to make that money work for you.
Exactly.
You don't want to wait until you're 65.
Come on.
Right?
Preach, girl.
Right.
Enjoy the fruits of your labor. And so it's really about, like you said, going back to childhood. It's amazing the messages and what we learn from our childhood that we don't even realize the junk that's there that is informing our decisions.
I like the way you said that, the junk that's there that informs our decisions. I mean, and I've heard little things like, well, you deserve it. You work hard. You should give yourself something. Gift yourself.
You deserve all of this, but maybe not right now.
Right. It's all of this immediate self-gratification with no sort of plan for the future that leads to freedom. And I agree with you. I think that was one of the things when I was younger, when I was making a lot of money, I did not need it. I used to say I live real cheap. I shouldn't say I didn't need it. I needed it, but I didn't, I had more than enough to cover my living expenses, my mortgage. I had paid off my car, wasn't going to buy a new one. All I ever wanted was not to have a car note. And that was the message I heard as a kid. Like, you made it if you don't have no car note, right? That's the, you're not paying on that all the time. And you said something too, is like making sure that your money is working for you and you're not always grinding and hustling for it to the point that you're stuck in a career that you hate. Because you have to pay your bills.
I really like that freedom aspect you talked about, like not being, kind of a slave to your money or having it control you.
That's right.
Or a slave to the person you borrowed the money for, right? Ooh. Mercedes-Benz financing, Ford Motor Credit.
That's right. That's right. And I just want to say, and I love my father dearly, and he knows this. When I was a teenager, he said investing in the stock market doesn't make any sense, and you should invest in yourself. And so as a teenager, I got the whole entrepreneurship But I really took the whole stock market doesn't make any sense. So I never took the stock market seriously
because it
until
didn't
my
make
30s, because that's what I heard.
right, because you
And I
heard
had
that.
to unlearn that,
Yep.
you know,
And
and it's
probably
a
what
great,
yeah. And there's a lot of messages in that. It doesn't make sense. Maybe I don't understand it,
that's it.
but then I don't trust it.
That's right. That's exactly right. That's exactly
Yeah.
right. Yeah.
You mentioned something. I know we were talking about the different pitfalls. And so I want to talk. We have a lot of young people who are starting to get into serious dating relationships and get married, or even think, by the time I turn 30, I want to be in a relationship and get married.
Mm-hmm.
What is financial gaslighting? Like is that something when people are in relationship, or how does that, what is that?
Well, gaslighting is when when your emotions and your words are twisted and used against you, so that you start to second guess and question what your reality is. And so that can be in a relationship, that can be, a senior citizen who, somebody has control over their money and they're doing stuff with their money, but, that's not legit. It could be between any two people, but at the end of the day, it is where you are sensing something is going on. And when you bring it up, they're like, they make you think like, no, of course not. Or, whatever case, or they're using it as far as making you feel inferior. So it's, you're so horrible with money. Like you don't know what you're talking about. And you start to question, maybe I don't know. And at the end of the day, it's laced in manipulation and control. And it's certainly a red flag that you should be aware of.
And kind of, I guess, going on that vein. So what conversations, if there's someone out here, a couple is looking to get together, maybe merge finances, or what conversations should be what financial conversations should be happening throughout the dating process to see if there's financial compatibility, or what does that even look like?
Yeah, or are there patterns that people should be looking out for?
Yeah, so well, outside of gaslighting, obviously, you really want to pay attention to the discipline and responsibility around somebody and their money. So that can look various different ways. Are they just frivolously spending all the time? Are they stressed at the beginning of the month? That might show some signs, right? Because we pay our bills at the beginning of the month. Just different things that make you question, like, okay, are they really, keeping up with their finances, or they're just out here looking, nice and fine, but they're still living in somebody's basement, which again, in the 20s, you are building, so that's not necessarily a bad thing. And none of this is necessarily a reason to not date somebody outside of gaslighting. But it helps you to just kind of zero in on some of the questions and the things that you need to focus on. So, if somebody is at the point of wanting to marry, I would definitely say have a conversation about your joint vision. What is your vision for you two jointly? Because what that will allow you to do is going to open up the money conversation. It might feel awkward just like, what's the credit score? How much do you have in savings? But if you start to say, we're about to get married, and what is our dreams? What is our vision going forward? And not that you would know that in totality, but if you start to say, yeah, I want a house, or career-wise, or kids, well, then that start to say, okay, well, what's the reality, or is it realistic for us to do this? And that's when you start to open up what's your credit like? Well, how much you have in savings? Then it starts to open up and unravel that conversation in a more natural way.
Yeah. Did you find that you and your husband were compatible financially in how you thought about money and how you approached money and debt?
It's interesting. I will say,
but when someone starts off a sentence with, it's
it's a very loaded question.
Yeah, it is.
So when my husband and we got married at 24, we got married, and we were dating for 5 years before that. And in his mind, we could not get married until he had a certain level of money or a certain status. But the thing is that when we got married, I was making double what my husband was making. And it had nothing to do with him being lazy or it had nothing to do with that. Right.
Yeah.
It was just the nature of our professions. He went into the radio industry. I was in the financial services. We were working just as hard. That's just the way it was. And so he grew up, we came into this marriage with him there. And he grew up where there was a point in time in his life where he didn't know where his next meal was going to come from. And so he had this very much tight, didn't want to do valet parking. I mean, not to say I do valet parking all the time, but you got heels and a gown on. You're like, okay, we can do valet parking today, right? No. And so
you're like, no, I'm gonna drop you off.
Right.
You're exactly right. You're exactly right. And so you have to kind of pay attention and say, what is this about? And
that's trauma. That sounds like trauma. A traumatic response to how he viewed and saw money, right. Or never wanting to go back to that place of, I never want to be in a situation where I am struggling.
That's right. But on the flip side, he will spend money on vacations in a heartbeat. And I'm like, I'm a homebody. I don't gotta go nowhere. And so it's really about communication. It's really about compromise. What I have found to be success with us, it's about love and mutual respect. So, you can have different views. We weren't too far apart, but even if you are far apart, even if someone's a major spender and you're a super saver, you can still have success, but you got to have mutual respect for one another and you got to compromise. Yeah. That's just in a partnership, period. And if you're not willing to do that, then, maybe you should.
Yeah. No, and I tell everyone, our listeners know that, I'm engaged. And so I've been through kind of the premarital, the premarital counseling process. And one of the topics was finances. And I tell everyone, all of my peers, like, have those conversations. It's not like straight out the gate, date one, you need to be, what's your credit score? How much, student loan debt do you have? But to your point, when you start talking about your vision, where are we living? What city, what location are we living in? What's the cost of living there? Mm-hmm. Are we going to have one car, two cars? Do you want to go back to school in the future?
That's right.
These are the conversations you can have that can open up, conversations around money, and that can give you some insights.
Yeah, I also think you just need to watch, right? Watch people's behaviors, when they go out to dinner, how they look when they show up. I had a friend, and her husband are doing fantastic now financially, but they were both in two high paying professions. But when it was time for them to buy a house, they couldn't. They both owned homes. They moved to another city, but they couldn't get a house together because of his credit, which is something she wasn't aware of, because she was like, well, I know he makes this kind of money, but didn't know about all the other things. And I made a joke. I was like, because he dressed very nice, impeccable all the time. And so I told her, I said, it costs money to look that good every day.
It does.
Yeah, it does. And so I think some things we ignore, right? And because we have discomfort with asking questions, we think it's rude. But, if you love someone, and two of you love each other, even if it makes you uncomfortable, it's not rude, right? It's something that we definitely need to talk about as we move forward, because we want to have that cash flow.
Exactly.
Yes.
And I wanted to talk about that because I know that is something you are very passionate in talking about, is cash flow.
Yes.
So for all of our listeners, can you just explain what is cash flow, why it's important, and then some of the work that you do around cash flow?
Yeah, so cash flow is simply what you have after you pay your expenses. So it's income minus expenses. And it's really important because if you're cash flow negative, which means that you do not have enough money coming in for your expenses, then you are that robbing Peter to pay Paul. You're in this endless cycle of borrowing and really just, can't get your head above water. If you're cash flow neutral, that means that your income is just enough to cover your expenses. So there, yes, you're surviving, but you're not progressing. You're not progressing forward with saving, investing, and really getting yourself out of that situation. You're stuck. and then
Mm-hmm.
you're stuck. And then cash flow positive is when you have more than enough income to cover your expenses. And that's when you can really make some serious moves with the right strategy. So I help my, my clients and people that I work with to really understand kind of like 5 steps to cash flow.
Okay.
Just first, be cash flow positive. And so that really goes into your budget and really understanding like, okay, how can you boost your income? How can you reduce your expenses, right? To really get to that point if you're not. And then the second thing is to really be explicit. So what is that cash flow number? Like, it's not enough just to say, yes, I'm good, I'm covering my bills, let's keep it moving. But what is that number? Because you're going to use that number and deploy it to work for you. So the third step is about be focused. So a lot of us have multiple goals. We either want to buy a house or buy a car or pay off debt. And what I have found is that if you focus on one goal at a time, you are more likely to actually achieve it. And so really helping people think through, okay, what's number one, what's number two, what's number three, and really go after it. The fourth step is be strategic. So if you're trying to pay off debt, okay, now I'm going after my debt. But if you have multiple debt, how do you know which one to hit first versus second versus third? So really being strategic within the goal and really calculating how long it's going to take based off of the cash flow that you're dealing with. And then be diligent. Being diligent, which means, making sure you're going back to your budget, comparing, your actual performance and making sure that you are staying on plan. Because if you have a plan, but you're not working the plan, then it's not worth anything at all. So
about that diligent piece, like what are some tools, like how does, because sometimes we'll do goal setting or we might do a budget, but we might not follow up with it. How do we try to stay diligent and make sure like we can cross that last hurdle?
So the way that you commit to your cash flow number, you have to commit to time to actually manage your money. So that is it weekly? Is it every time you get paid? Is it once a month? What day of the week is it? For me, it's Friday because we spend most of our money on the weekend. So I need to know, okay, on Friday, I need to know how much we're working with and how much we have left before we go out. Because otherwise, if I only look at that thing once a month, I will guaranteedly go over. That's not even a word. I will definitely go over because I don't know where I'm at. Right?
Yeah.
I don't have a clue. And so it may not be enjoyable, but it's absolutely necessary if you are serious about achieving your desired outcomes.
So, Imani, let me make sure I got this straight. So, I'm either cash flow negative, that means I owe. So, there's no money probably going into a savings account for me for the future. Or I'm cash flow neutral, that means I make just enough to pay everything I do owe. So, I'm paying all my utilities, whatever my expenses are, but I don't have no money really to do anything else. And if I do something else, I'm still borrowing, right? So I might be putting this weekend trip with my friends or with my man on a credit card.
That's right.
And then if I'm cash flow positive, that means after I pay all my expenses, there's cash left for me to make some decisions about how I want that money to work for me.
Absolutely.
So how is that a percentage? So should we be aiming for a percentage of our income or a specific number? How do you decide how much cash flow and is cash flow the same as like disposable income?
Yeah. Different names for it. But
okay.
That'll be the
same. And I did have one question. So in that expenses, just for clarification for everyone, is savings in that expenses or is that not including?
No.
Okay.
So so this is your take home pay. So in that, it does include that you are contributing to retirement.
Okay.
Right? But your take home pay.
But that's only if you opt into a retirement program with your employer.
Yes.
Absolutely. So we're looking at take home pay. Yes. Thanks for the clarification. Yes. And then your expenses. So it's really about your bills.
Okay.
And then your what I call miscellaneous. So that's your food, your lifestyle,
entertainment,
things like that.
Okay.
But you have to have money that is for your future. So we got the if you are contributing to retirement, but that's still 60 something, 59 and a half plus 60 something years old, right? You need to be managing and deploying cash flow now.
Right.
So you don't have to necessarily wait. You can actually use that money to replace your current income.
Come on.
Before retirement age.
Yep.
But you got to put in the work. You got to sacrifice. You got to delay that so that you can do what you want sooner rather than later.
But Imani, I'm young. I want to live my life. I got Instagram. I need to pose up. People be in my story looking to see what my outfits look like.
So I don't know if I should. I'm my age.
I'm buying stuff on, but Imani, come on now. I'm young and I buy this stuff cheap. So my outfits be like $25, $35.
So I used to be there. I am someone who is in their 40s, and I am telling you, I thought the same thing. I did not take retirement seriously. I'm thinking that is so far away. Like, I got time, right? And here I am now, midway through. Okay. And I would have definitely done some things differently.
Mm-hmm.
I don't think I've ever admitted this publicly, but in full transparency, when my first child was born, I had trust issues and I was not ready to take her to a daycare or anything like that. I knew somebody who lost their child in the same situation. So I left my job. I had over $100,000 in a 401k and I cashed it out, which is probably one of the worst things. You would never hear a financial expert tell you that. And I'm not going to tell you to do that, but that is part of my story, right?
Mm-hmm.
And what happened? Well, that money depleted and I had to get another job. So I say all that to say is that there are a lot of things and a lot of mistakes that I definitely would not have done, but I'm just giving you reality of what was in my mind. I'm thinking I have time, right?
Yeah.
But if I had maybe thought a little deeper of like, how can I make this work? How can I get over my trust issues and leave that $100,000 in there? It could have been $500,000 by now.
Yeah. Yeah.
Right?
And
so it's just to make you really don't negate the fact that time is on your side and you don't have to save as much if you start earlier.
Mm-hmm.
So definitely a priority.
You've spoken about freedom a lot, and I know a lot of our listeners have entrepreneurial interests. Auntie Janine and I are both entrepreneurs. How does having a money mindset and really focused on cash flow, how can that help entrepreneurs? How can that help you be more successful as an entrepreneur?
Well, because at some point, just me as an entrepreneur, like I left my job to start Finance by Faith. Right. I did not start it at the same time as I was working because it was a conflict of interest and I couldn't. So if you have entrepreneurial pursuits, having cash flow will give you that opportunity to launch out, whether you want to do it with your job. And if you can do it with a job, do it until it builds up. But if you can't, like I couldn't, it gives you that reserve and that cushion so that you can survive until revenue starts to come in on a regular basis. So it is paramount.
Yeah.
That you have.
And I agree with that. When I left my job, it was unexpected that I was going to go into entrepreneurship. I had no plans, but what I did, I had stacked my cash, you know, and I had it in a place, both it was going into investments, but I also had cash going into an investment account at Fidelity that was coming right directly out of my paycheck. I never touched it, never saw it, didn't have a debit card to that account. If I wanted that money, I had to go to the Fidelity location in Buckhead, Georgia, in Atlanta, in Buckhead, to tell the people I want my money. Mm-hmm. Right. And so it wasn't convenient for me to get to it. Right. Mm-hmm. So I couldn't go online. I could see the money online. And I think that was it. It was one, because I knew I needed those sort of boundaries, so that I knew that money was there. I'm not going to ever touch it. It was also with my investment accounts, my IRA and some other investment accounts. So I think, you have to be able to do that. But when I left my job, I didn't feel a significant amount of stress, and
Right.
I voluntarily left. And at the same time, had I been asked to leave through a layoff or something, I still had about 2 years that I didn't have to work or earn any
That's it.
income, and I
That's it.
still could have paid my bills. And I think, and when we talk to you all about this, it's really about that. It's not just 3 months, because now you need more than 3 months
Yes, you
or
do.
6 months, because
Or a year.
right,
Well, how long have we been in this pandemic now?
right,
Yeah,
and it
yeah,
takes 3 to 6 months when you're not in a pandemic sometimes to find a new job, just
That's right.
because of how the market turns. And so I think that's important. And you will wake up one day. Today you wake up at 25. I promise you, God willing, you're gonna wake up at 45 and be like, how in the world did 20 years go by?
Yes, ma'am. Okay.
You're gonna be
And
totally shocked.
You
yeah,
will.
and I have one more question. I know I'm asking all the questions today for you, Imani, but so we go through a lot of transitions in life. So for those of us, we go to school, we get an education, we get a job, we may meet someone, we may start a family. I'm in the place of my life where I'm getting ready to start building a family. What is something that you learned maybe in your early 20s that has been with you, or a lesson or an experience you had that has really kind of served you throughout the different phases in life that you've experienced or that you're going through?
Good question. I would like to answer it in the form of my marriage.
Okay.
So like I had said earlier, when we first started out, I was making more than he was. Now, tables have completely turned, but that was our reality back then. And what I was very conscious about was that finances was, one of the top reasons why people get divorced.
Mhm.
And I did not want that to be our story. So I suggested that we funnel our money into one account.
Mhm.
And the reason I wanted to do that is because I never, ever wanted money to be an issue as far as that dynamic of one making more than the other.
Mhm.
And so that has served us extremely well. And I know that's not for everybody, but for us, money has hardly ever been an issue as far as between the two of us, because his money is my money is we don't even see the difference because it funnels through. And for some who say, well, I don't want my spouse to always see what I'm spending or what I'm taking out, there's a middle ground, right? So if you have $600 combined and that's your miscellaneous, one person get 300 and the other person can get 300, and it still levels the playing field. And I tell you, for us, we have not had any sort of real true money arguments or anything, because that dynamic has been completely taken off the table. And so that has served us well.
Oh, that's great. And you're right. It's based on your comfort level and your couple, as a couple.
Yeah.
But it sounds like there's so many dynamics in marriage, right? So if you can eliminate arguments about one, I think that's why it's important to talk about it. So thank you for sharing that with us. So as we kind of wrap up a little bit, this has been amazing, and we look forward to having you back on our show.
Yes,
and maybe
I'm having a great
doing
time.
some additional things with us. I'd like for you to, so we're gonna, in our show notes, we're gonna list those 5 cash flow tips for you. But I want you to share with our listeners, how do you work with your clients? So when you're working with people, you're coaching them, how can people get in touch with you? And then what do you do? How do you help people get to this positive cash flow?
Yeah, so I do consultations either with individuals or with couples. I also do workshops and trainings, you name it, and really just focusing on, okay, where are you? Where are you trying to go? And let's chart a course to get you there, because personal finance truly is personal. And I don't think any one path is the same for everybody. There's a lot of dynamics. And so really just honing in on, what is your true desire? What is your time frame?
Mm-hmm.
What is your risk tolerance? What are you willing to do? And let's figure out something that's truly realistic, that you believe in and that you will carry out.
So what if someone's not, they don't have a strong Christian faith? Can they still use your principles to?
Of course.
Okay.
Oh yeah. No, it's not necessary. It's not Christian based. It's just my language is very biblical, but no, these principles cross the
Universal.
yeah, universal, absolutely. And so with the cash flow, the cash flow method that I did talk about, you can actually get that for free. It's called the Cash Flow Starter Kit. And if you go to financebyfaith.com/Imani Hamilton, which is IMANI, you can get access to that. You can see the blogs, other resources. If you want to schedule an appointment, you can find all of that right there.
Well, and we will put that in the show notes. You'll see that at the end of this broadcast. If you're watching with us on YouTube, you will also see how to get in touch with Imani and get your mindset right.
Yes.
That's right.
Cash flow positive.
That's right.
Cash flow positive. Because that's the only way to financial freedom.
Agreed. That's right.
So Imani, as we wrap up, I'm going to, Trey loves to ask this question. I'm going to get it this time. One thing that you would love to leave with our listeners and our viewers, what's the one message that you think is most important for them to have as we wrap up today?
I would say exposure is key, and to be flexible and be patient with yourself.
Yeah.
I
like that too. What a great way to end the show, because it ties very closely into, our belief system here at Before 30. So, expose yourselves, talk about money. I want to throw that in there as part of the exposure. Don't be afraid to talk about money. You guys heard last week, Trey and I laid it out. We talked about some of our financial mistakes. We told you some of the biggest checks we've cashed, some of the things, and some bonus checks. Those bonus checks back in the day, Imani, I'm sure you had some big bonus checks. So we talked about that. And so be comfortable, because one, it teaches you so much about what you don't know, what people are doing with their money, how to make money, how to invest your money. And then how to overcome mistakes. So
when you allow yourself to engage in those uncomfortable conversations or explorations, that's really giving you an opportunity to grow.
Yeah. So people might tell you, don't talk about money, and that please say it again. Imani, what?
Please do. We got to change the dinner conversation. Yes. We really do.
We do need to change, because what we end up doing is talk about other people's money when we're talking about celebrities. Right? Like, we're making them rich. We're talking about them. We're really talking about their money, because when their names are on our tongues and in our conversations, we're validating their value, which keeps them making money, which we want. But let's talk about your money. Let's validate you and come up with some great ideas on how you can continue to create positive cash flow. So we want to thank you all for listening today and joining us. Imani, we just really appreciate you sharing your life and your story and your business with our listeners and our family at Before 30 today. So just remember, at Before 30, you are a masterpiece and a work in progress. Thank you.
Thank you, guys.